Do you know what your credit score means, or why it's so important for your financial well-being? It's time to unravel the mystery behind these three-digit numbers that hold such sway over our financial lives. Let's start with the basics. A credit score is a numerical representation of your creditworthiness, a prediction of how likely you are to repay borrowed money. This score is crucial because it can impact your ability to get loans, credit cards, and even the interest rates you're offered. Credit scores typically range from 300 to 850. A higher score signifies better credit health. It's like a financial report card, with 850 being the straight-A student and 300 needing a bit of tutoring. Think of your credit score as a key. A good credit score can unlock many financial doors, from buying a home to starting a business. So let's delve deeper into understanding what makes up your credit score. Did you know that your credit score is not just one big number, it's actually made up of several key factors? Let's break it down. Firstly, we have payment history, which accounts for about 35% of your credit score. This factor examines whether you've paid your past credit accounts on time. So, if you're a fan of prompt payments, you're already on the right track. Next up is credit utilization, making up about 30% of your score. This refers to the amount of credit you're using compared to the total credit available to you. Think of it as a ratio. The lower the number, the better. It's generally recommended to keep your credit utilization under 30%. Then we have the length of credit history, which represents about 15% of your credit score. The longer you've been borrowing, the better it is for your score. It shows lenders that you have a lot of experience handling credit. Fourth on the list is new credit, accounting for roughly 10%. This looks at how many new accounts you've opened and how many recent inquiries lenders have made into your credit. It's a bit like a popularity contest. Too many new accounts or inquiries can make you seem risky to lenders, so take it slow. Lastly, we have credit mix, which also accounts for about 10%. This factor considers the different types of credit you have, such as credit cards, mortgages, or student loans. A diverse credit portfolio can be beneficial, but it's not worth taking out unnecessary credit just to mix it up. All these factors combine to form your credit score. It's essential to maintain good habits in each of these areas. Pay your bills on time, avoid maxing out your credit cards, establish a long credit history, don't open too many new accounts too quickly, and maintain a diverse mix of credit. Now that you understand what factors make up your credit score, you might be wondering, how can I improve my score? Improving your credit score might seem like a daunting task, but it doesn't have to be. Let's break it down into 5 actionable and practical tips that align with the 5 factors of a credit score we've already discussed. First and foremost, pay your bills on time. This might seem obvious, but it's worth repeating. Your payment history is a significant factor in your credit score. Missing a single payment can negatively impact your score, so make it a point to pay all your bills before their due dates. Automating your payments can be a big help here. Second, reduce your credit utilization. This is the ratio of your credit card balance to your credit limit. A lower ratio is generally better for your score. So, if you're consistently maxing out your credit cards, it's time to rein in your spending. Aim to keep your utilization below 30%. Third, don't close your older credit accounts, even if you're not using them anymore. The length of your credit history can contribute to your score. Older accounts demonstrate a longer history of credit management, which can be beneficial. Fourth, limit your new credit applications. While it might be tempting to sign up for every credit card offer that comes your way, remember that each new application can result in a hard inquiry on your credit report. These inquiries can temporarily lower your score. Finally, diversify your credit types. Having a mix of credit, such as credit cards, a mortgage, or an auto loan, can show lenders that you're capable of managing different types of credit responsibly. These tips aren't quick fixes. They're habits you need to develop and maintain over time. But by making these small changes, you can start to see improvements in your credit score. Remember, improving your credit score is a marathon, not a sprint. It takes time and consistent effort. Let's quickly recap what you've learned today. We started with a basic understanding of credit scores, a 3-digit number that lenders use to determine your creditworthiness. It's like your financial report card, and it plays a crucial role in your financial life. We moved on to discuss the factors that influence your credit score. The most significant of these is your payment history, making up about 35% of your score. It's all about whether you've paid your bills on time, every time. Next is the amount you owe, which accounts for approximately 30% of your score. It's not just about the total amount, but also the proportion of available credit you're using. The length of your credit history, the mix of credit types, and new credit applications are the other factors that make up your score. Each of these contributes 15%, 10%, and 10% respectively to your overall score. Remember, a mixture of credit types demonstrates that you can handle various forms of credit responsibly. Then, we dove into tips to improve your credit score. We talked about paying your bills on time, keeping your credit utilization low, and not closing old credit cards. We also touched on diversifying your credit mix, and only applying for new credit when necessary. What's important to remember is that improving your credit score isn't an overnight process. It takes time, patience, and consistent good habits. Keep in mind too, that everyone's credit journey is unique. What works for one person may not work for another. In conclusion, your credit score is more than just a number. It's a reflection of your financial habits and can significantly impact your life, from getting a loan to renting an apartment. Understanding and taking steps to improve your credit score can open up a world of financial opportunities. So why wait? Start your journey to better credit today.